Divorce is never easy. It's often painful, complicated, and something that most people just want to get through. Whether you're legally separated, getting divorced, or already divorced, you may need to remove your ex from your mortgage and assume the loan on your own, and you may be wondering, what are your options? Hi, this is Lori Richmond with Westcorp Mortgage Group, and in this video, I'm going to share some simple tips to consider if you're going through a divorce. Often in a divorce, the spouses either agree to sell their home or refinance their mortgage so that only one person's name is on it. If one spouse is going to stay in the home and not sell it, you will have to agree to what will happen with the mortgage. The divorce agreement will then spell out who is responsible for paying the mortgage. Perhaps you want to make sure that your ex is no longer financially responsible for repaying the loan, if you both agreed that you'll keep the house. Or you might want to make sure that your ex won't get any of the proceeds if you sell the property or inherit it if you die. No matter why you're removing your spouse from your mortgage, you will have to follow certain steps intended to protect you, your ex-spouse, and the mortgage lender. Here are some common questions that come up regarding the mortgage in a divorce. Can I remove my ex's name from the home and the mortgage? First, you need to understand that removing a spouse from the home, also known as a title transfer, and removing them from a mortgage, also known as a refinance, are two completely separate tasks. Many people look at title and mortgage as being one and the same. They are not. So, can you remove your ex's name from title? Yes. In fact, in instances where one spouse has agreed to take over the house as part of the divorce settlement, it may be wise to have the former spouse's name removed as quickly as possible so that they legally won't get any of the proceeds if you sell the property or inherit it if you pass away. Removing one party from the title does not, however, remove them from the current mortgage lien, assuming the loan is in both of your names. A title transfer is accomplished through a simple grant deed or interspousal deed. The same cannot be said for the mortgage, which requires one spouse to qualify for a new mortgage on their own. Let's take a look at those steps, beginning with taking your spouse off your mortgage. Most likely, you will not be excited about this news. There's only one way to have your spouse's name removed from the mortgage, and that is to apply for a loan to refinance the mortgage into your name only. Why is this? Well, your existing mortgage was approved in both of your names, giving the lender two sources of repayment. Although you and your ex may decide between yourselves that only the person who's getting the house will be responsible for paying the mortgage, that agreement doesn't affect the lender. In other words, the mortgage lender can still come after your ex, or you if your ex is getting the house, for repayment if the mortgage payments are not made, unless and until you refinance the mortgage into your own name only. This means that while you may not be living in the house, you could still have it affect your credit if your ex decides not to make the payments. You will have to complete a new mortgage application and qualify on your own for the house. You'll have to prove that you'll be able to make the payments on your own. The lender is going to look at your income, your assets, your debts, and your credit scores. If your credit and financials aren't strong enough on their own to qualify for the loan that you need, you'll have to produce other options, such as making a larger down payment or asking someone to co-sign the loan for you. The next step is to remove your ex from the title. This is typically done through a quitclaim deed or an interspousal transfer deed, meaning that your ex gives up his or her rights to the property. This deed is then filed with the county clerk's office and title to the property becomes updated. Sometimes it makes sense to refinance the loan pre-divorce, prior to the judgment or dissolution going into effect. Oftentimes, the refinance is done prior to any settlement agreement being put together. If you're updating title to the home in a pre-divorce refinance while still legally married, you'll need to hold title as a married man or woman as his or her sole and separate property. Then once the divorce is finalized, you can file another deed changing the title from your sole and separate property to an unmarried man or woman. These are just a few of the important processes and timing considerations associated with the division of property. Another thing to think about is, should I allow my spouse to have exclusive use of the home if I'm still on title? If you agree in a divorce settlement to give your spouse the home, ideally they'll refinance the home mortgage in their name only. This will provide reassurance that you no longer have any financial responsibility, and you can then be able to confidently sign over title to the home. The exception to this is if there is a deferred distribution, whereby both parties agree to maintain possession of the house until such time that a court orders the house sold, usually when there are no longer minor children living in the home. Okay, so what are the risks of not removing the ex from the mortgage? One, and it's a big one, your credit could be affected if the ex, who got the house, misses a mortgage payment. And two, it could make it difficult to qualify for a new home purchase because your name is still on the other mortgage and it will be counted in your debt even if you're not making the payments. The divorce settlement agreement might state that the retaining spouse is responsible for all mortgage and housing expenses, but the credit bureaus don't care which party the property was assigned to. If you are co-signed on a mortgage with your ex-spouse, from the creditor's point of view, you have agreed to keep up timely payments. In the event that a payment is missed, this will be reported directly to the 3 credit bureaus. Yikes! So what happens if you want to buy a new home? There are several items to consider, but most importantly is that the old mortgage that your ex hasn't refinanced into his or her name yet will be viewed as additional debt for you and may prevent you from qualifying for the home you want to buy. In most circumstances, a lender looking at a mortgage application is normally able to exclude the debt on a former residence, provided the settlement agreement reflects such. Lenders consider this as a legal assignment of debt and will not penalize the departing spouse for the additional debt. So you will want to weigh the risks involved before agreeing to retain a joint mortgage following the divorce settlement. If you have home ownership questions relating to divorce, you will want to get your questions answered up front. You'll benefit from the in-depth insights of an experienced mortgage advisor who will have knowledge about the divorce process and divorce-specific underwriting guidelines. By performing a detailed underwriting analysis, a mortgage advisor can offer guidance on how the mortgage fits into your settlement strategy. While it's true that divorce is a highly legal process, there are several financial implications to a divorce as well. Maybe a smart move to also consider retaining the services of a financial advisor. If your divorce is complex and there are complicated financial and tax implications, a financial advisor can offer creative solutions to help you understand the long-term impact of your decisions. Thank you for watching. This is Lori Richmond of Westcorp Mortgage Group. If there's anything we can do to answer your questions about mortgage options while going through a divorce, please don't hesitate to private message me. And don't forget to check out my YouTube channel, Lori Richmond Mortgage Team, for more helpful financing information.